Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne. My partner Ryan's working on the outlook for the week, which will be coming out a little bit later today. And I'm going to flash our trusty disclaimer for this week's sector situation. And then I'm going to flash the intellectual property rights notice. And that ought to be enough to get us started. I'm still not fully recovered, unfortunately, excuse me, from what's been going on with the COVID, but I'm certainly feeling a lot better. And thanks for all the well wishes and the webinars and so forth. Just not right yet, unfortunately. But anyway, let's get started. I'm flashing this just to remind everybody where we are. Ryan's been including this, doing a good job of including different seasonality graphics that we've been able to come across. You can see that we're talking about November here. You can see that we're talking about the trading day of the month, and we're now approaching the last few trading days of the month. And you can see what that looks like overall, right? The last 21 years. So overall, pretty solid overall. You really can't complain if you're a bull. And then a little bit bigger picture, this is what happens right in the midterm election year under different conditions. And you can see that everything pretty much has a solid finish to it. So maybe we will, if this follows, right, we will see a little bit of mid-month weakness, but then you get generally a solid finish to the year. Now, this is what's going up against this bullishness is going up against, I think, short-term overbought conditions in some sectors, and also things like this that we flashed in macro measure. I'll flash quickly here, but these are percent of stocks above the 50. You can see that's back near the highs. Percent of stocks above the 20, not too far removed from the recent highs, hanging in there. And then the 200 is the same. I just wanted to start this way just to show that this is up there making kind of a new recent high. So you're pretty much back here. Now, some people might argue, well, that's good. It's actually good. This is more like bull market type action. It very well may be, right? In retrospect, we might be looking at that. But bottom line is, right, this is where probably getting a little bit overdone, I would think, in the short term. Just that's one reason why I'm looking at it saying, you know, this is a rough week. I think that we're coming into. I don't think we have another week much like last week, where I don't know how much of that holiday action I can believe in, and how do I read that, right? Do I put a lot of faith in that? And have confidence in that. And I really can't say that I will do that. I feel like that was typical holiday action, and you know, it doesn't mean a lot in the end. You have to really see what's going to happen. But coming in, I think some things are overbought and the markets are a little messy. And I'm more of a let's just take what comes our way rather than again pound the table on something when you don't think it's there. So I do want to point out that there are some Fed speakers this week, and Ryan will have naturally an economic calendar in this week's market outlook. But just pulling this up really quickly, there's some heavy duty stuff happening on Wednesday with Powell and then Beige Book. There's a lot of information coming out, a lot of releases. And the same is really true on the first day of the new month right there as well. There's a lot of stuff coming out, and the Fed's back in action and so forth. The Fed's back in action here too. So just be prepared. I think you're just still in that nimble phase. If I pull up, let's see if I can get, where am I? We get this one going here. Maybe I'll pull this over. But we are, just before we get into the sectors, we're right near where I've been waiting for us to get in. I guess we did get into this little transparent box that I drew, and mainly it's probably more that the declining 200 there in purple's gotten really close. So kind of close to achieving an objective. And then what happens, I don't know. I'm not sure what to think based on the way that things traded last week. We thought there'd be a little bit of maybe early weakness and then see what happens from there. I think you have to do the same thing we were doing before. I think you've got to just say, can we break out and keep going? And does it have that melt up feel where things are going to get even more stupid, so to speak? And we close gaps that have been left, like that one, for example? Or did we lose did we lose momentum, and are we really flashing a little bit of weakness already? And should we see a little bit of a pullback first? I'm open to both. I mean, I don't think things are that overbought everywhere that I'm in heavy, strong belief that we roll over quickly to start the week. But at the same time, I'm not really thrilled if I'm a bull the way things are in some of these areas. They're just a little overdone. So let's bring up maybe one of the top names in that sense, and that's the XLI. And you can see, right, we are way up there. Right now, the RSI reading is 72. And you're just barely inside your upper Bollinger Band. And you've been in control of bulls now for several sessions in a row, and the volume's tailing off. But is it, right? Is that the holiday, which I think part of it is for sure, or is it just people are losing interest in buying up here now that it's had this run? Excuse me. I do think that is overdue. But at the same time, it did take out highs. It did make a new high. And I think that's very interesting. I mean, that just doesn't, again, make a lot of sense to me, but it is very interesting that they were able to do that. So going into some more of the sectors, another sector that I think is worth mentioning in that regard is the basic materials. So added a few ideas in EOA Pro in here. We had some recent paper. I mean, that has basically I think that's a new closing high there, or nope, just a few cents off of it. But you can see, I mean, that's done really well. RSI and that is just a little bit below 70. So the moves have just been amazing. And you're now getting again towards your upper Bollinger. So some of these, like these two for sure, they're making me feel a little more cautious, right? Staples, XLP, right? This one's also making me want to feel a little more cautious because, excuse me, they haven't let this to go now. They just keep goosing this. The volume continues to decline. Just a factor I would weigh in there normally, but the way this thing's sort of in a no man's land up here, I can't say it just can't keep going, but I certainly don't like entering here, right, as a fresh trade. Now, if it pulled back a little bit, found some support down, maybe a point or two, and then started working its way back up, I'd feel a lot better about it. But just at the moment, it's been up for several sessions basically in a row, and I'm not really a big fan of missing out on the early, easier money and coming in late unless I've seen a little bit of corrective action, which I don't think we've seen. But that's another sector that just overdone, if you ask me, to the upside. Another one that's like that is the XLF. So this is one we've been focusing on. You can see that's overdone a little bit there. Now, it's not technically at 70 on the RSI, but it's up there, and it's had just an amazing run for what it is, Let's just qualify it at that. Also, XLB, which is just below 70, the healthcare space, this also has had an amazing run. So I think these are getting a little overdone. You can see that. And I think that's worth noting. Here's a little bit of a gap that it could try to come back, that it can work with if it wants to try to come back up a little bit more. Just a little bit more would close that gap, and getting a little bit outside the Bollingers while in the process of doing that. But what I always say, if you've been watching my videos, right, I'm a big believer in, if you show up and you're a bear here, you're too late to the trade. And if you show up and you're a bull here, you're too late to the trade. Right, that's what I'm always really checking out with my Bollingers is, right, if it's probably taken a pretty strong sustained move to get it to that point in most cases. So, where were you when this was breaking out back in here? This is probably where you really should be picking up on that. You shouldn't be just having this flash on your radar right now. If you're doing your work all the time, assuming you're doing your work, but that's just overdone. Now, can it eke out a little bit more? Of course it could, but I feel like it's just barely under 70. So that's what I'm getting at, is that I don't think this is easy now with all that we have coming our way, right? Some of the major index ETFs are a little messy. Some are a little bit, I think the diamonds are a little overdone. Some of these sectors are just a little bit overdone. And I wouldn't be surprised, right, if they want to keep the rally going, I think they need to start focusing on some fresh material, right? So that would be more or less the big tech names, which are heavyweights in the indices that have not ran. That's probably, right, a possible place they'd rotate to And I would encourage everyone to keep their eyes on the Apples, Amazons, Microsofts, Googles, at this point, Berkshires, Visas, UNH, some of the really big names in terms of market cap, because those, especially the tech names, the so-called FANG names, they could really be something that helps the melt up really get underway. If they get those things rumbling up, that could be big. So on another note, though, XLE, remember, I've been charting this along with the oil future. So let's just grab that. And this is still looking pretty rough, the oil future. So I think you have to keep that in mind for XLE. I don't know how XLE can defy that forever. I think there's vulnerability. The Saudi news really was a masterpiece of market manipulation and reversal. And so that is over or priced in to an extent. Now I would wait to see what happens. Do you break back below the 20 there in blue? Do you take out these highs and try to go again? But I think with oil where it is, I would just be a little concerned in there. Just keep your eyes on the oil futures and see if they start to continue, well, they continue to weaken, then see what XLE does. Now, XLK, this is what we're sort of talking about, not the exact weightings in the Qs or whatever, but if they can start to get some of the tech going, right, remember, that's been pretty beaten down. It has a lot to make up. Kind of not impressive, right, relative to other things lately. But if you're a bull, if you're someone who decides to become a bull in here lower, has a really nice run, and then you're still a bull holding, you almost have to say, well, wait a minute, like, even though it hasn't been all that impressive, it has held most of its gains to this point. And so you have to ultimately be impressed by that, even if you're not. So even if you're not that while you're watching it, when you just take a step back and say, well, you know what, this thing's really held its gains overall to this point. So got to give it the benefit of the doubt. If they start to break it out above the high or above that close, pretty close, doesn't really matter. But if they start to get tech stocks to join the rally, that's pretty big. And there's a lot of things, especially in communications, which we'll look at now, that it wouldn't take much to create a new closing high. And these things look, right, they've been consolidating. They look sort of like they're not overbought. They've got plenty of energy as a result. They could certainly do something more than they have. So again, I'd keep my eyes on, if they start to rotate, this is why it's a good thing to keep your eyes on some of these sectors with a nice grid, because you'll see where they're starting to head into. And you can start looking at some of the best names in those areas if this melt up action does really spring to life and we get rotation into other places and the indices benefit. But again, I'm not predicting that as much as I'm saying these are some thoughts that I have just from experience. XLF, you got to like the fact that it really closed and made a new high. But again, 5 days of control for bulls, probably a little long in the tooth at this point. Not really super overbought in the sense that it's above 70 yet, but it's getting close. So that's had a heck of a run. Transports, right? This is another area that is, I think, is important. And they closed the week on a high note, right? So them working their way back up towards the 200 in purple, that would be another good sign. So if you start to notice that, hey, these transports are starting to work better, again, I would look at that as a good sign as well. If they only have a mild pullback in XLF, that would be good. We looked at XLV. We'll just take another quick look at it. Overdone. I mean, I think you have to just say this is overdone. It really should be a breather. We've had paper in a lot of those names, and they've moved up. A lot of the stocks have moved up. We've taken a look at XLP, another one I think that's short-term overdone. Getting a little worried given the RSI reading is nearly 72. XLY, another with a pretty high. I'm sorry, not this one. I meant XL. I was thinking XLI. XLY is looking pretty interesting, not overbought yet, and right near the 50 there in gold. So again, this is another, I think, important space. If they start to, I guess, act as if the consumer is going bonkers with discretionary, to me, I'm not so sure how that's happening, and that's a good thing given if you x-ray your way into the data, the x-raying your way into the data looks pretty concerning because people seem to be tapping credit for staples purchases. But when is any kind of good news at all ever stop bulls from buying? Very rarely that I've ever seen it. So buy first, ask questions later. Real estate doing its thing. I mean, this to me is, again, 5 days of control, mainly for bulls. Don't know how they're doing it, but they're doing it, right? So still in an intermediate uptrend. I think you have to be maybe a little concerned that the enthusiasm, excuse me, isn't there, and maybe you're starting to get a little bit, starting to get up there a little bit on a basis of your RSI. You're at 63, but nothing terrible. Maybe slight negative divergence at the moment, but nothing really, really terrible. So I would use your 10-day there in white if you want to go short that one. If you want to go long it, I would be breaking out above the high, just go with it if the market's in that mode. XLB, another world beater. Basic materials have really had a run. Let's see on another chart. I can just cite the 70, right? So we're at 70 right there with a tiny bit of negative divergence there as well. So that's what I mean. I think a lot of these things are just a little bit overdone. I talked about XLI. They're a little bit overdone where you're at a 72 on this one. And your RSI is fine, but it's really not breaking out. It's kind of confirming high versus high. It's not too much of any kind of negative divergence or anything like that. And then XLU, we always do to be thorough. And that is actually looking better, right? Look at how that's looking. And this, might have to do with rates coming off and so on and so forth, as well as other factors. But this is about to take out all SMAs again. And we traded this one up and down. So, but 5 days of bull control, maybe it needs a little breather before it tries to push through. I'm more of, let's take a look at semis, housing, and then XAU. And we'll call it a day, but here's your semis, right? Remember, if they get this above the 200-day and they start this going, there's gaps that can be filled still from above, it looks like. Well, actually, that doesn't look like it. Usually I leave those for gaps. I'm not sure why that's there. It might have been for divergence, just to highlight divergence for some folks. But above the 200 there in purple is probably a big deal if they can get that to happen. And this is probably interesting from that perspective, because this was a sector that was really hit hard, but it's only at 62 right now, so it does have room. That's on the daily in terms of RSI. So on the weekly, it's not as high, I don't think. So given that, right, it does have more room if they're going to continue to pull off the shenanigans. Now, I think that if the big stocks start to go, I think in tech, and they start doing more risk on in tech again, then these semis will probably continue to go with them. XHB, this is another one similar where we're seeing similar highs and maybe a slightly lower RSI reading. So probably not really that great technicals. I think you could use the 10 in white, the purple there as a trigger on the downside into the 200-day right there, right below. And that would be aggressive. And as long as it stays below there, try to wait it out, see if you can get a nice drop. It's not a big trader, but overall, just a nice little drop down to the 100 there would be my look on that one. But nothing special there. Just they're holding it near recent highs, give them the benefit of the doubt, I guess. But hard one for me to buy, frankly, with the way things are. But there's always reactions and so on and so forth. Even if they don't make sense, there's always price reactions. People, I guess, hope always springs eternal. If you look at this right here, when we look at the XAU, this got a little bit overdone on your RSI, not really at 70, but in the mid upper 60s. The last couple of weeks has gotten there twice. So just be careful that there's a double top on this one. This is a notoriously frustrating sector to operate in. I've done it for a long time, probably, 30 years, actually. It's one of the first sectors I got involved with. And it can be so frustrating. But yeah, so just be careful on the double top there. A little bit of RSI weakness is creeping in, but overall, right, they've made a new high, and you got to give them the benefit of the doubt there. We've been doing that, and you know the 200s within striking distance, and taking that out, I think could definitely offer some serious potential, because I think the breakdown point, this is what I like to do on certain things, that I try to look at the breakdown point, which is right about there where you really broke down. That's near 131. And so I think this could put a nice little, if it does put another pop together, I do think that could make a pretty nice little, visually at least, move up towards there to where it broke down from. That's one of the little things I like to use for projections, that is kind of nifty, that helps you out when you're not seeing anything else that's great around there for whatever reason. But that's the quick view on the sectors. Like I said, still struggling a little bit this week with the health. So hopefully I'll really get back to completely back to normal this upcoming week. But I think we should be more opportunistic this week, and I think we should stick with the singles and doubles program unless there's news. But I do think that there's potential for news, clearly, right, on Wednesday and Thursday, especially Wednesday with Powell speaking. You might get comments, who knows? They might just wave them off and not even care. Again, who knows? But certainly the potential's there. So I think a little messy. I think some of these sectors are overdone and need to cool off. And I think the big thing is to look for, is rotation starting? Have they taken the XLI, the XLB, some of those XLV, have they ran with those enough to now they're not willing to keep plowing into them at this stage, and they're more likely to rotate into some of those tech names and some of the big names in the market that are all still beaten down? Because if they are, and they get those going, that could really be big stuff for the major index ETFs, and that really could deliver the melt up that that seems like it's trying to develop. In my mind, right, the fact that they won't let some of these things go. So hope something I've covered this helps you out this week and in the future, maybe. And thanks for tuning in. I'll see everyone through the updates and webinars for the week. Thank you.